Christmas has arrived early for not-for-profit entities. You would say, why? The AASB has finally issued the new AASB 1058 Income for Not-for-Profit Entities and also amended AASB 15 Revenue from Contracts with Customers by adding an Appendix F, which is Australian-specific implementation guidance for not-for-profit entities. Now, this new standard and the new application guidance to AASB 15 addresses two things. Firstly, when a not-for-profit entity should recognise income, and secondly, how much income should be recognised. Now, the interaction between AASB 15 and AASB 1058 is quite interesting. A not-for-profit entity should start off by assessing whether AASB 15 would apply to their specific transaction, event, or part of it. So in order for a transaction to fall within the scope of AASB 15, the performance obligations will have to be sufficiently specific. And in order to make that assessment, we will have to consider the very specific facts and circumstances and also apply judgment. And that's going to be an issue, that's going to be difficult. If AASB 15 applied to the transaction, we would use the normal 5-step revenue recognition model to determine when to recognise the income and how much. If AASB 15 does not apply, a not-for-profit entity will then have to assess whether AASB 1058 would apply. Now, AASB 1058 applies when a not-for-profit entity receives volunteer services or enters into transactions where the consideration to acquire an asset is significantly less than the fair value of the asset, principally to enable the not-for-profit entity to further its objectives. Now, there's two things in there. First of all, how do we determine the fair value of non-financial assets? And secondly, what is our judgment around the meaning of the word significantly? When would the cost be significantly less than the fair value? Now, the timing of income recognition depends on whether a transaction gives rise to a liability, a performance obligation, or a contribution by owners. Not-for-profit entities will have to start the process to get ready for these amendments very soon, because these standards and amendments apply to financial reporting periods beginning on or after 1 January 2019. And as discussed earlier, there's a lot of judgments and assessments that have to be made. To assist our clients, BDO will be issuing an accounting update this week, as well as hosting a number of client seminars and webinars in early 2017. If you would like to discuss any of this any further, please feel free to contact me or your local BDO contact.